So basically yesterday what we were doing is that we were trying to look at one example. Example of what? Example of preparing cash flow statement using indirect method. So for that we had following information. We had income statement here for the current year. By current year I mean whichever year you want to prepare the cash flow statement of. Then for current year and previous year we had the balance sheet information available, and apart from that certain additional information was also available. With the help of these we were trying to prepare the cash flow statement. Now for that I was giving you certain steps. So step number 1 was that we would have prepared the format and we would have started with by writing net profit here. That is our step number 1. Step number 2 would have been that go to all the additional information and prepare the reconciliation for the same. So for that we would have prepared the machinery reconciliation. Once you are done with the reconciliation, what is the purpose? The purpose is that can you match the opening balance with closing balance? If there is any different amount of difference, that amount is going to be hidden purchase or sale information in cash. So in this particular example, we found out that there was such information, which is a purchase of machinery of 52 lakh rupees. What did we say? We said that we started with an opening balance of 10 lakh rupees. In the information, it has been written that 10 lakh worth of machinery was sold off for a profit or loss of something else. And then there was a 2 lakh of depreciation. So we said that if only these two entries were there, what would have been the machinery value, closing value look like? So machinery closing value would have looked like a negative of 2 lakh rupees. Whereas what do we see as the machinery closing value? We see a positive number, that too positive 50 lakh rupees. We looked at the balance sheet. Look at the balance sheet here, and the closing balance is 50 lakh rupees. So we said that this difference is because of a fresh purchase. So that is how we deduced that they must have purchased machinery worth rupees 52 lakh rupees. Then what did we do? After you have prepared the reconciliation, then look at the information in the reconciliation and try to figure out, is there any item which was paid or received in cash? If yes, then bring them to wherever in the cash flow statement they belong. So we found two such items in this reconciliation. One was of sale and one was of purchase. So purchase went with a negative number, 52 lakh rupees negative, here CFI, and sale went with a positive number of 15 lakh rupees. Then what did we do? We move to our next step. After you have prepared the reconciliation statements and after you have transferred the amount in the cash flow statement wherever they belong, the next step is to go to all the items in the income statement one by one. What is the idea? The idea is to go to all the items in the income statement and find out that if there are any items under heading A or heading B. This is what we were doing in the last class. I think by then the time ran out, the way I see the amounts written here, that now we want to go to all the items of income statement and we want to find out, are there any non-cash item and are there any non-operating items. So for that we started looking at all the numbers. Sales is a cash item, cash and operating. COGS, cash and operating. Rent, cash and operating. Salaries, cash and operating. Depreciation was first such example. Now this one is a non-cash item. Now just to give you a ready reference, I had requested all of you to keep the books ready today. So you can all turn to page, let me check which page. Chapter, basically it would be chapter 13 in your book, where cash flow statement is mentioned. So there certain items are given for an illustrative purposes. Let me find it out and then I'll tell you exactly where to look at. Yeah, this is chapter 13 and there is an exhibit. So it is exhibit 13.8, exhibit 13.8 on page number 468 of the RNS book. So you can see a table there, and in that table you have certain more examples that what do we mean by non-cash item. So for non-cash item they have given some 5-6 examples, that is the adjustments under heading A. They have also given certain examples of non-operating items and adjustments under heading B, and then they have also given certain examples of heading C. So just so that you get a little bit more confidence, if you are worried that अरे हमको कैसे पता चलेगा कि डेप्रिसिएशन नॉन कैश था कि नहीं था? बेसिकली वन क्राइटेरिया शुड बी दैट whichever journal entry does not involve either in credit or debit cash, but it goes into the income statement is a non-operating item. Non-cash item. For example, when you transfer to provision for bad debt, what would have been the journal entry? Journal entry would be bad debt expense debit and provision for bad debts credit. Provision for bad debts credit. Now here, neither in debit or credit ever cash comes. It's not that you have not paid for it right now and you create an outstanding. No, it's not going to happen. So this is also an example of non-cash item. So similarly, you can think of all such examples. So they have mentioned 5 such examples here: depreciation, amortization, depletion, bad debt, and excess provision written back. So these are the examples. If you are able to find these items in the income statement, always reverse their effect under heading A. What was heading A? Heading A was that go ahead and find out in our income statement any non-cash item. And then do what? Then reverse their effect. That is what we are trying to do. That we went through all the items in the income statement one by one. We found out that depreciation of 2 lakh is what need to be reversed. So how do you reverse the impact of an expense? You add it back. Okay. Okay. So this is where we were in the last class. Before I move ahead any further, any questions up to here? What happened to the video feeds? I don't see the video feed. I see only 3 people. Yeah, tell me. Any questions? Okay, cool. So let us carry on with the next few items in the income statement, and let us try to identify that if we are able to spot any non-cash or any non-operating item. Let's move to the next one. So next one, it says gain on sale of machinery. Now, is it an operating item? Gain on sale of machinery?
No, sir.
No, sir.
No, sir.
Then what it is?
Investment.
This one is an investment activity. Why? Because gain on sale of machinery leads to a change in long-term assets. And I have told you as our definition that long-term asset changes are to be talked about in CFI and not CFO. That is why this one is an example of adjustments under heading B. That is, this one is an example of non-operating item. So we need to remove its impact here. We need to remove its impact here and bring it wherever it belongs. So let us do that. So how do we reverse the impact of a gain of 5 lakh rupees? How do you reverse the impact of a gain of 5 lakh rupees? You subtract it. So you will say subtract gain on disposal of machinery, subtract 5 lakh rupees. What is the reason? Reason is because we want to remove the impact of this gain from this particular net profit. This net profit of 20 lakh is after considering the 5 lakh gain, and we are saying that 5 lakh is not from operating reason. That is why I want to take it off. So how do you take it off? You subtract it now. Okay. So needless to say, any time anybody any question, feel free to interrupt me and ask. I'll carry on. So now we need to bring this where it belongs. This gain belongs to CFI. So let us see, when we wrote this sale number 15 lakh, the gain is already written in this 15 lakh. This gain 15 lakh constituted what numbers? This gain, this sale of 15 lakh constituted 2 numbers, the cost and the gain. Let us go ahead and check. The cost was 10 lakh rupees and the gain was 5 lakh rupees. That is how we got 15 lakh rupees. We had done our reconciliation statement. In the reconciliation statement, the cost of the asset was only 10 lakh rupees. And from the income statement, we found out that this machine is sold for 5 lakh rupees of profit. That is how we had deduced earlier on that the cash you would have received is 15 lakh rupees. Right? नहीं याद आ रहा है कुछ बरसों पहले की बात पीयूष? So that is why we have written 15 lakh here. This 15 lakh already includes the cost part or the closing book value part and the gain part. So that is why we don't need to write it again. Otherwise, if we had not written the sale of machinery so far, then we would have written it right now. Okay, so because we have written it right already, no need to do it once again. Okay, so this, our job is done. Next one. Next one is interest received. So interest received, we said that we are going to follow Indian accounting standards when we are solving a cash flow statement in our class. So that is why we are going to say that this one should be in a CFI item and not CFO. So this is also an example of adjustments under heading B, that is non-operating item. How do I do the adjustments under heading B? I remove them from CFO and I bring them wherever they belong. So let us do this. So waiting for the computer to catch up. माइक्रोसॉफ्ट आती है क्या इधर पीपीओ में या फिर फॉर प्लेसमेंट्स फाइनल? पता नहीं क्या सस्ते सस्ते कंप्यूटर बनाए यार, बताओ हैंग हो जा रहा है, या तो मैं बहुत फास्ट लिखता हूँ ये संभाल नहीं पा रहा है।
सर सरफेस प्रो ले लो।
ये अंकल वही वाला है, पैसे खूब खर्चे किए, चलता नहीं है बस। Anyway, maybe it has surrendered in front of all the heavy assault of all these online classes. I don't know what the reason. I'll just use some other connection. Maybe it is dropping because of the unstable internet connection. So I'll use my phone's connection. Let's check if that is the reason of this lag. Okay, cool. Let's continue. So what I was trying to say here is that we will continue in the same way, and we found out that there was one more item called interest received. Now, according to our understanding, that is, we are preparing the cash flow statement under Indian accounting standard. Even interest received should belong to CFI. As I had mentioned earlier in some previous classes, is that logically speaking, it could go in CFI as well as CFO. But right now, because of accounting rule, we are treating it under CFI. So that is why this also belongs to our adjustment of criteria B. Criteria B is what? Non-operating items. So what I will do is that I will remove the impact of this. I will remove the impact of this interest here and then bring it wherever it belongs. So let us do this. How do you remove impact of interest received 2 lakh rupees? I will subtract it. So I will write less interest received here. Interest received negative 2 lakh here. And then don't forget to bring it here. So this one I need to write because I have not already written. The sale number I had already written in which this gain was already present. That is why I didn't write it again. But there is no such thing that I have done so far for interest received. So let us write it again. So we will say interest received positive 2 lakh rupees. Now why positive? Because you are getting cash. Now in the entire cash flow statement, you would find when you are using indirect method, then the item number A and B, the sign are going to look like counterintuitive, basically because they are reversing the impact of something. That is why they are going to look like counterintuitive. But rest all will look like exactly how they affected the cash. The heading C under CFO as well as the entire CFI and entire CFF. So here you are getting cash because of interest received. That is why in this CFI we are writing it by positive. Okay. Okay. Let's carry on. So now what we have done is that we have looked at all the items of income statement one by one. We looked at all of these one by one. So we have covered everything in the income statement. Next step is that similarly, we will cover everything in the balance sheet. And every item will go somewhere or the other. Let's go ahead and check. One thing would be that let us go ahead and find out the current assets and current liability to be incorporated here in changes in working capital. So for that, we will look at the balance sheet items, and in that we will find all the short-term items, all the short-term assets and short-term liabilities, and we will find its change. Yeah, question, go ahead Ishan.
Sir, can you please again explain the gain from machinery part?
Gain for machinery कल आए थे क्लास में?
हाँ सर.
झूठे, सच बताओ.
सर टीचर से विश भी किया था सर.
Okay, okay, fine. हमारे पास digital tools मौजूद है. Anyway, basically what we are saying here is that there are 3 reasons of differences why net profit can be different from CFO. These reasons are non-cash items in the income statement. Reason 2 could be non-operating item in the income statement, and reason C could be changes in working capital. Now, when we're talking about number 2, that is non-operating items, the reason why we are reversing that impact here is that the reason is that we want to bring them somewhere else, that they belong to some other category. So it is here I had given example of some salesman, that let us say there are 2 salesperson and by mistake somebody else's sale gets counted in somebody else. So how do you account for this? Wherever it shouldn't be counted, you remove the impact there, and wherever it should be counted, you add it there. Example ऐसा बनाया था कल. So what are we saying here is that we are trying to say that those items under heading B are very special. We are only reversing their impact because we want to say that these belong somewhere else. Because these belong to somewhere else, that is why here we are reversing their impact and then we are transferring them to wherever they belong. So for non-operating items, what we are saying here is that they are involving some cash impact. That is why, but they are not of operating nature. Means CFO may nahi belong karta. They don't belong to CFO. They belong to somewhere else. 2 such examples we found in our income statement. One was gain on sale of machinery and one was interest received. Once we spotted them, then we are saying that our net profit is after taking an impact of this positive 7 lakh of gain. So we need to do 2 type of adjustment. One adjustment needs to be done is that we want to remove the impact of 7 lakh here. So that is why we have removed 7 lakh here. And then second part we are saying is that we need to bring it where they belong. They both belong to CFI, investing activity. So that is why we have brought in here. Now, when you are saying interest received, then how much cash you would have received because of interest? You would have received 2 lakh rupees of cash. But if the same question I ask about how much cash did you receive because of gain on disposal of machinery, is it only 5 lakh? Did you receive only 5 lakh for the gain of salary, gain on sale of machinery? No, you received as well as some more money. You sold it at a profit of 5 lakh, not at 5 lakh, right? So when I want to write this number, I want to write the full cash that you got. Then this cash is always going to be the cost plus any profit or loss. That's what the cash consideration is always. So that is why we have written here, it's almost like we have written here 5 lakh in form of profit plus 10 lakh for recovery of the cost. That's what this 15 denotes. But when we had written this 15 lakh rupees, it already contains 5 as well as 10. That is why we don't need to write it again. How did we figure this out? We mila kahan se tha? We figured this out because when we were preparing the reconciliation, then itself we figured it out that you are getting 15 lakh rupees from the disposal of machinery.
Sir,
yeah,
हमने जो वो 52 कैलकुलेट किया था for purchase, shouldn't it be mentioned somewhere in the balance sheet or any T account already, because it was a transaction that year?
Yes, anybody would want to respond to Rashi's question. Rashi is asking that here you deduce that you have purchased 52 lakh. Okay, before Rashi, let me just get one small confirmation. जो पिछला question बता रहा था, is he clear? The person, Ishant, is it clear?
Yes, sir, clear.
Okay. So let's go to Rashi's question. She's asking that here in the additional information, you by reconciliation, you deduced one new information called machinery purchase of 52 lakh. Now she is asking that if there was any such transaction, would it not be shown somewhere in the income statement or balance sheet?
सर जर्नल एंट्रीज में होगा.
कहीं ना कहीं जर्नल एंट्री में होगा. Basically, the fact that you are seeing this value as 50 lakh, that itself means that there must have been such journal entry. So that's what we are trying to deduce here, and we deduced it. So this 50, otherwise तो ये negative number होता ना, negative 2 lakh होता. But we see it is 50. Then there must have been one journal entry which is increasing machinery value. So it is already after such journal entry. That is why we don't need to bother about that. Right now we need to only bother about what happened to cash. So let us carry on and bother about what happened to cash. Any more questions? Okay. Yeah, go ahead, Madan. No question? Okay, carry on. Okay. So next step, what we are going to do is that so far what we had done, we went to all the items in the income statement one by one. What was our objective? Our objective was to find out if there are any items which belong to exceptions under heading A, or sorry, adjustments under heading A, or adjustments under heading B. Under heading A, we had non-cash items, and under heading B, we had non-operating items. So we have done this task. Next stage is going to be step number whatever n+1 is going to be go to all the items in balance sheet one by one. Now how do we do this? First of all, to do the adjustments under this heading, that is changes in working capital, we want to go with all the current assets and current liabilities one by one first. So have you all learned how to identify the short term or the current assets and current liabilities by now? कौन-कौन से current होते हैं? Let me give examples. So for example, in this particular balance sheet, cash is current assets, account receivable is current asset. Rent payable, salary outstanding, accounts payable are current liabilities, and rest all are current, non-current assets or non-current liabilities. When we do this, basically we want to find out changes in current assets and current liabilities. How are we going to record for this? We had already set up a system for this. We said in the yesterday's example also we saw this, that whenever a current liability is going up, means what? You must have saved cash. For example, what could be an example of current liability? Look at this number. Salary outstanding is a current liability. Here it says that earlier it was something and now it is higher. Current liability is gone up. Now this one is telling us that whether you have used more cash or you have saved cash. Can anybody think about this and tell me?
We have saved cash.
You have saved cash. Saved cash with respect to what? Has somebody given you money that you haven't paid salary? No, saved cash with respect to whatever is appearing as salary expenses in the income statement. So remember, our starting point was what? Our starting point was net profit. To calculate this 20 lakh net profit, we had taken 2 lakh expense of salary. But have you paid 2 lakh in cash? No, you have paid 1,50,000 lesser. How did I know? I looked at this number and that's how I deduced that you haven't paid 1,50,000. That means what? That compared to whatever is the profit, your cash would be 1,50,000 extra, right? Because you have shown an expense and that is giving you a profit of 20, but you haven't paid cash. That is why we have one rule is that whenever current liability is going up, we will add it. Now there are 4 combinations that are going to be written here. Whichever is easiest for you to intuitively find an argument of, you write that one first and then rest all you can derive by corollary. That if current liability going up is positive, then current liability down should be what? Negative. If current liability down is negative, then current asset down should be what? Positive. If current asset down is positive, then current asset up should be what? Negative. So I just derived rest all in corollary. But you can do whichever way you find it convenient. That for one you found the logical understanding of the argument, then it's good. Let's say you found logical understanding for this one, that's also good, no problem. Wherever you want, you can start from there. Right now, because I understand that this takes a little bit of time for you all to digest, I will repeat the argument for all of these one by one. Or why should I repeat? Let us find somebody who would want to tell it to the class. Let us say, can anybody tell any similar explanation about why do I want to subtract current liability reduction? Can anybody explain it to the class? Batao.
In this example, if we see the accounts payable,
Yeah.
so earlier it was 3 lakhs and now it is 2,50,000.
Okay.
So it would be the case that someone has paid up 50,000 of payables. So that cash would have come into our system. So
Yes,
that
cash would have left the business. That means you have paid over and above whatever was the quota for this year. That apart from this year's expenses, you have also paid some previous year's expense. That is why accounts payable is falling down. ये समझ आया? Accounts payable earlier it was 3 lakh and now it is 2,50,000. That means what must have happened? That means not only you have paid everything that you purchased in this year, but on top of that you paid 50,000 extra in this year, which was due from previous years. तभी तो वो कम होगा ना आपका ऑब्लिगेशन. जब आप पे कर दोगे तभी तो ऑब्लिगेशन कम होगा. When you pay last year's obligation, what happens to cash? Cash falls down. That is why this negative. ठीक है? पीयूष समझ में आ रहा है? Okay. Let's see one more. Current asset falling down. I have written add here. Can anybody think of an example and try to explain it to the class? The current asset जब fall करेगा, why do I want to add it?
So basically, when we are supposed to receive amount, like we have some debtors for us. So when we have received an amount from them, so we'll reduce the amount of debtors, and that is which says that the cash has received for us.
Let us say account receivable earlier it was 10,000 and now it has gone 0. Then what do we deduce? What must have happened? We have received the money from all of these people. That is why current asset reduction should be added. Okay, fair enough. And lastly, one example for why do I want to subtract any increase in current asset? An example? I think one we have here itself. So can somebody try to explain this to the class? इसका लॉजिकल आर्गुमेंट सोच के बताओ.
Sir, if we take the case of account receivables going up means essentially that you have made a sale, but you have not actually received the cash. So that's the reason.
So that is why, as compared to whatever your net profit is after some amount of sales, all of this was not received in cash. Somewhat lesser cash was received. So that is why you need to subtract it, that some amount of sales was trapped in form of account receivable. We couldn't release cash because of that. So if we couldn't release cash because of that, that must mean that this 20 lakh fully does not denote our cash, but basically the cash would be 10 lakh rupees lesser. So I would subtract 10 lakh rupees. So now whichever of these four reasons is more easier or rather easiest to you to find the intuition of, you start from there and write rest as corollary. And that is what we want to write in heading C. In heading C, now we have a formula ready. The formula is whenever current asset goes up, we want to subtract it and then corollary. So let's go ahead and check. Now, when you go to do this, let me try to go from the liability side. I will start with the liability side. Current liability, salary outstanding is the current liability. Okay, so salary outstanding is going up. So current liability going up falls in the first formula. So we should add it. Also intuitively, we have underpaid by 1,50,000. That is why we will add it. So we will say add increase in salary outstanding by 1,50,000. So ye likh diya. Next one is what? Next one is current liability is rent payable. Now rent payable, earlier it was 2 lakh rupees, now it is 1 lakh. That means पिछले साल का कुछ एक्स्ट्रा पे किया है, you have paid additional over and above. Right? So we would want to subtract this. So we will say rent payable subtract 1 lakh rupees. That is this difference. Every place I am finding this difference. So this time the difference is 1 lakh rupees. In reduction of 1 lakh rupees. So I will say subtract reduction in rent outstanding negative 1 lakh rupees. चलो ये भी हो गया. I think I have to push this CFI a little bit down. थोड़ा सा CFI को down कर देते हैं. Let's do this because I have CFI. Purchase was what? I think negative 52 tha, and sale of positive 15, and then interest received of positive 2. These were the numbers. Yeah. Next, what we are going to say? Next, we are saying that what happened to our accounts payable. Accounts payable, earlier it was 3 lakh. Now we see that it is only 2 lakh 50. So we have just now seen the argument. The argument is that you must have overpaid 50,000 rupees. So when you have overpaid 50,000, it saps your cash. It takes away your cash, business's cash. So we will subtract reduction in accounts payable. So we will say under same heading, heading C, subtract reduction in accounts payable of rupees how much? 50,000. Similarly, we will go to all the current assets and current liabilities except a few. Now, before going to the assets, I will tell you all the exceptions which you don't want to touch right now. These exceptions are going to be as follows. Two of them we already know. One exception is that if you have short-term investment, then don't bring them in this heading C. Don't bring them here. Let us say you have increase in short-term investment. What are you going to do about that here? Nothing. Short-term investment, as I have said, that it should go in the investing activity. So we will bring its impact in CFI. Okay. Next one is going to be your short-term loan. Scroll करके माथा चकरा गया होगा तुम लोगों का, but it's okay. Next item is going to be short-term loan. So similar to short-term investment, which goes into CFI, short-term loan goes into CFF. That is why if in the short-term assets or liabilities, if you find these two items, do not bring them under heading C in CFO. Heading C in CFO में इसको नहीं लाना. Right now I am writing all the exceptions to heading C in CFO, which can be found in current assets or current liability. Now, next such exception is going to be cash. You don't need to write cash once again here. Why? Can anybody tell me a reason why I don't want to write cash up and down here? Can you think of a reason?
The delta cash will come as the net delta cash of our full cash flow statement.
Yes, because this entire thing itself is like a big reconciliation of cash. So delta cash, the opening cash and closing cash is anyway going to come towards at the end. Come at the end. So we don't want to write even cash there. So three exceptions. One is short-term investment, another is short-term loan, one is cash. Now last exception is going to be our dividend outstanding. If you have dividend outstanding, where it will be, it will go in CFF. Because dividend payment is financing activity. ठीक है? ये समझ में आ गया? So except for these four, if you have any current assets or current liabilities, or in other words, short-term assets or short-term liabilities, go ahead and find out their increase or decrease, and their increase or decrease need to be adjusted according to this formula sheet. So let us do this. We have already done it for the liabilities. Let's quickly do it for assets. Fortunately for us, there is only one asset which need to be adjusted right now, which is account receivable. Account receivable is a current asset and it has gone up by 10 lakh rupees. So the fact that it has gone up, it has taken up cash. So that is why we will say subtract increase in account receivable by 10 lakh. So we will say subtract increase in account receivable by 10 lakh. And that is it for CFO. After this point, we would have gotten our CFO. But you don't need to stop here right now and start doing calculation. This can wait. What we will go ahead and do is that we will go to rest of the items in the balance sheet and we will find out if there are any missing information. Let me tell you in terms of steps. So step number whatever n was, that go to all the items in income statement to find out adjustments under heading A and B. Next step was what? Go to all the current assets and current liabilities to find out adjustments under heading C. Then further to that, n plus 2, step number n plus 2 is go to all the items in the balance sheet which you have not touched so far. ना तो उसका reconciliation बनाया है, ना तो उसका delta गया है, and compare their opening balance with the closing balance, and you may find certain missing information. For example, we have not touched land so far. Machinery was touched when you prepared its reconciliation. Machinery is done, account receivable is done, accounts payable is also done, rent payable done, and salary outstanding done. So I have just tick marked everything for which I have looked at the opening and closing, and I have done its treatment in cash flow statement. Now I am going to all those items which I have not accounted for so far. So one such item in the asset side is land. Land के बारे में अभी तक कहीं कुछ किया नहीं है. So I went to land and I checked that I started with 17 lakh of land and I ended at 22 lakh rupees of land. What must have happened? So the default assumption is that if there is no information provided, the default assumption is that any increase is a purchase and purchase in cash, and if there is any reduction, it is a sale, and if there are no profit and loss given, then sale at no profit, no loss. And in cash, of course, in cash. So let us go ahead and do this. So here we find out that land, which was earlier 17 lakh, has gone up to 22 lakh. What must have happened? You must have purchased some amount of land. तभी तो land बढ़ा हुआ दिख रहा है ना balance sheet में, right? So we will just write it land purchase. Where, in which item should I write? CFO, CFI, CFF. किधर डालें इसको? CFI में डाल देंगे. तो land going up by 5 lakh rupees, CFI. So we will write in CFI purchase of land. Purchase of land negative 5 lakh rupees. How did I find this number? Because I looked at my opening balance and closing balance and I found out that closing balance is higher by 5 lakh rupees. That means I must have purchased this much of land. Let us go ahead and look at rest of the numbers. Let us say equity capital. Earlier it was 5 lakh rupees and now it is 60 lakh rupees. What must have happened? Is there any other information about equity anywhere in the example? No. So once again, the missing information would be fresh issue in cash. So we have this denotes that we have taken fresh issue of capital of 55 lakh in cash. So when you raise fresh equity capital of 55 lakh, where does it belong in the cash flow statement?
CFF, sir.
CFF.
So we will bring this to CFF. So CFF, let us write CFF. Let us write issue of capital, issue of equity capital, whatever you want to write. Positive,
55 lakh.
55 lakh rupees. So positive 55 lakh. Now why positive number? Because you are issuing capital. That is why cash is coming to you. Similarly, if let us say I'm just assuming one number right now, you don't need to write it, just listen to it carefully. Let us say if there was one number called a loan. Earlier it was 3 lakh and now it is 17 lakh. Then what must have happened? You must have taken new loan. That's what it is. Corollary, let us say earlier the loan was 17 and now it is 3. Then what it would have denoted? Let's say nowhere else the loan is talked about. That must mean you have repaid some amount of loan. ठीक है, ये simple intuitive है ना? Loan is falling down, तो क्यों fall down करेगा? Loan, if it is going up, why it would go up if there are no other information given. So the assumption is that if there are any other reasons because of which loan is going up or down, they will have to give it to you in form of additional information. Right now, there is no such additional information. That is why we will go ahead and assume that they are for cash. So we will, that is why we will assume that this 55 lakh rupees is fresh issue of equity capital. So now we have looked at this number, this, all of these. Now only two numbers that we have not touched so far in the balance sheet is one is retained earning and one is cash. Cash, we already know where it will go. It will go completely at the end. So the only number left is retained earning. Now for retained earning, I have a small tip. For retained earning, whether some information is given to you or not given to you, always prepare a reconciliation. Why? Because retained earning will always involve one type of adjustment. Let's do this. So my tip is that for retained earning, don't bother, simply go ahead and quickly prepare a retained earning reconciliation. Reconciliation kaise banate hain? We always start with the opening balance. We start with the opening balance. Opening balance is 70 lakh rupees. So I will write this 70 lakh rupees here, this 70 here. And now I will write any reasons because of which this retained earning would have gone up or fallen down. Are there any reasons that we already know because of which this year's retained earning would go up or fall down?
Net profit.
Net profit.
This year's net profit. So we will say add this year's net profit, and we will add this year's net profit. Let's go ahead and check. It is 20 lakh. So we will bring this 20 lakh here. यहाँ पे 20 lakh लिख देते हैं. Let's write add 20 lakh. If nothing else has happened, then we should see our closing balance of retained earning as 90 lakh. Which in this case, by chance, we see that, okay, our closing balance is 90 itself, right? So in this particular example that I have created, very carefully created item, that there is no missing information. But if there was any missing information, let us say instead of 90, it was written, let's say only 83 lakh here. Can you tell me that what this difference would have denoted? If instead of 90, if it was only 83 lakh, what this difference would have denoted? Can it be purchase or sale of retained earning? Is there any such thing? Then what it would have denoted? Think about it. It's not that difficult.
Owner must have taken.
Owner must have taken money. When owner takes money from retained earning, what it is called?
Drawings.
Drawing for dividend. Drawing is neutral. That drawing could be from retained earning or capital. But if we know that it has been taken from retained earning, then we can call it dividend. So this difference would have been dividend. Okay? Confused हो गया पूरा दुनिया भर की चीजें. Right now, just have to digest them like a piece of information. We will see enough examples. Don't worry. If you are feeling a little bit intimidated, कि इतना कैसे याद रहेगा, बहुत complicated हो चुका है. That is not the point right now. The point right now is for you to grasp is that wherever I am making certain statements, do you understand the rationale or the reasoning of those statements? So keep making sure that you understand the rationale or reasoning. 2 or 3 practice questions and you will see that you will get it in no time. Okay. Basically, what did I just now say? For those who are a little bit lost, I said that we want to prepare retained earnings reconciliations at all given point of time. Why do we want to do this? Because it may contain a hidden information about dividend. To find that out. Because always in retained earning, we will have one adjustment to be done from income statement, which is called add net profit. So we started with opening value, we added net profit. If the resulting number doesn't match with the closing balance, then the difference has to be dividend declared. In this example, it is not such. There is no such case. That is why we don't want to write anything. Okay. But if in next few examples, we will see that even dividend missing information would start coming in. Okay. So right now, just keep it in mind that for retained earning, always prepare the reconciliation to try to match the opening with closing. Okay, so now we are done. We looked at all the items in the balance sheet also. After you have done this much, if you write the totals of all of these items, then we should be able to find the change in cash during the period. Change in cash during the period. So while I'll listen Sarthak's question, maybe you can do the addition. Sarthak, बताओ question.
Sir, can the retained earnings be more? As in, now we got from reconciliation 90, no? Can it be 92? Matlab, is it possible? I'm not sure.
You tell me, is it possible? Anybody else tell me? Retained earning, can it go higher? Can you buy retained earning? You can withdraw from your profit, right? But can you contribute to your profit without going via income statement? It's not possible. So that is why this will be the only case possible that retained earning either it exactly matches or it will be slightly lower. If it is lower, it is dividend declared. Okay. Okay. Yeah. So let us quickly do the totals. You guys do the total. I will write some numbers here. Okay. 50 and 70. Okay. What is the total of CFF? Total of CFF is positive 55 lakh. What is total of CFI? Let's quickly do this.
Negative 40, sir.
Negative 40. Okay. Negative 40. What is the total of CFO? Positive 55, negative 40. So it should be positive 5. Is it positive 5? Check karo. Is it 5 lakh rupees positive? 5 lakh aa raha hai?
Yes, sir.
Basically, how did I know that it should come 5 lakh rupees? Because I already know what should change in cash be. Because I know my opening cash. So cash flow statement in that sense is that question का answer आपको पहले से पता है कि that's what you are going to. It's almost like LHS and RHS are equal. You know what you are going to prove. It's just that some terms you need to fit in between. That opening cash was 50 lakh rupees. Closing cash was what? Closing cash was what? 70 lakh rupees. So from this information itself, I could have said that the total from this equation, this information. From this information itself, I could have said that the total change in cash has to come to positive 20 lakh rupees, which we are getting exactly the same number. Even though we have calculated our example randomly, the only thing we took care of is that we had a balance sheet which matches. As long as you have a matching balance sheet, you will exactly be able to calculate a cash flow statement from that your own created example. Okay, fine. So we'll see you all tomorrow. And don't get bogged down. The process is slightly longer, but it's not something that you can't handle. Okay? So we will see at least 2 more practice examples. And once I see that you guys are getting too cocky, then we will do the case. So certainly then once again we will sir ke bal patak ke marenge aapko. But yeah, the case is slightly difficult. So we will see that we have at least practiced 1 or 2 questions, easier ones, before we take the case. Okay? Sure. See you all tomorrow. Bye.